the Australian energy market operator has warned new energy supplies are needed to avoid shortfalls later on this decade. Matter of urgency, according to AEMO. Joining us now, the Chief Investment Officer at the Motley Fool, Scott Phillips. Scott, good morning to you. This sounds troubling. So what supplies are they calling for?
Oh, mate. Look, I mean, AEMO is pretty agnostic as to what needs to be done. As any good public servant, any good regulator should, they're saying, well, you guys decide. But what they're saying is there may well be energy shortfalls, like what's the code for brownouts and blackouts, if we don't do something. Now, they're mentioning maybe it's long life storage, maybe it's pumped hydro, or maybe it is more baseload generation. They're leaving that choice, the political football, to somebody else to make. But what they're basically saying is without more firming up power, without the ability to add more to the grid, because a couple of key projects are running late, that is Snowy Hydro 2.0 and the new Curry gas plant in Newcastle and New South Wales, those maybe potentially leave the grid short of supply in some circumstances. Now, they're not ringing the very loud alarm bells, a little one for now saying, hey, we better fix this. The point is, as you say, it's urgent because later this decade feels like a long time away, unless you're in the energy generation business. And these things take years and hundreds of millions of dollars to solve for. So you can't just flick a switch tomorrow. If there's going to be a problem in 2027, 28, 29, you want to be dealing with it right now.
Well, I mean, I'm talking to Matt Canavan about this. He's licking his lips, as it would turn out, over the statement that came from AEMO in the next hour. But, I mean, like you said there, it's a really good point because it talks of problems that we're going to have over the next decade because of reliability requirements. And so much of this, when it comes to renewables, is going to take so long to come online. With that said, it feels like an inevitability before there are black or brown outs.
That's the problem, mate. It drives me slightly nuts. Last 10 or 15 years, there's been complete policy failure, honestly, from governments of both stripes, from Parliament in broad strokes. There is not enough generation, not enough certainty for fossil fuel-based generation, if that's what we need, nor was there enough certainty, enough money going towards the replacement by renewable energy. Whatever side of that debate you want to jump on, from climate or policy or politics or finance or economics, choose your weapon, choose your side. But either way, the problem was governments effectively just going into the cross salute, blamed each other, pointed at each other, said someone else will fix it at some point. We may well pay that price, and it won't be a price paid, or maybe a political price paid by the then current government in 4 or 5 years if the lights go off. But as I said, it is a long-term problem. These decisions should have been made in 2015, 2018, 2020, not waiting until 2023 and then having to wait to AEMO to say, hey, guys, you really need to sort something out. That's been the fundamental problem. There wasn't enough ROI for the new renewables. There wasn't enough ROI and certainty for additional or refurbished existing fossil fuel generation because no one knew whether or not they could get a return on those hundreds of millions or even billions of dollars invested. And if you're in the finance game, if you're in business, you're not putting that sort of money on the line unless you have a very strong sense that you're going to get a return on it.
Speaking of the finance game, so much attention around super and Jim Chalmers and tax breaks. That was more so yesterday, but you've got an interesting take on this today. Super funds have had a solid start to the year with a rebound of shares and bonds.
Yes, whatever the government decides to do, and again, whatever Parliament votes on at some point at least, we're in a slightly better position than we were at the end of December. Now, we know on the share market here and overseas, January was very, very good. In fact, we had an 8% gain on the ASX in January alone. That's more than the average year's capital growth for the ASX. So, look, it was an unusually good month, but what it has meant is it transfers to a gain for super funds. Now, an 8% gain in the share market, 3% gain in super. Why? Obviously, because the average balance fund has in property, cash, bonds, and other things as well. The share market doing extraordinarily well, doing most of the heavy lifting, particularly while property kind of goes sideways, maybe even a bit down when it comes to commercial property. So having to make up some of that. But yeah, good news after last year, which was a tough year for investors generally and for super funds in particular. We started the year with a bang.